On today's Hashi, I'm discussing this week's FOMC meeting, Powell's remarks at the presser, and weekly unemployment data. Today is Thursday, January 29, 2026. I'm Byron Lazine, and the Hot Sheet starts now. Live from Florida, it's a pleasure to be with you wherever you may be. Thank you for tuning in. It's such a pleasure to be able to deliver this hot sheet to you each and every single day, Monday through Friday, as long as the markets are open. However you may be listening, whether it's here live on YouTube, appreciate it. See all the comments where you guys are tuning in from. Good looking group here of Bammers. And if you're listening to the replay, whether it's here on YouTube, Spotify, or Apple, appreciate you. It's an absolute pleasure to do this show. It's a pleasure to be able to bring another Fed day, another big Fed decision. You know, the Fed never had this much, much of a spotlight until until they let inflation get completely out of control. They put the spotlight on themselves by calling inflation transitory. Remember that? And then when Jerome Powell was reappointed, he then changed his tune 8 days later. Oh, wait. I think it's not transitory. Actually, I think we miscalculated that. They've had a lot of miscalculations. They've had miscalculations for the better part of a year of what is going to happen to inflation. Remember in April of last year, inflation was supposed to be the death note. It was supposed to skyrocket again. Hasn't done that. There's been a lot of pressure on the Fed. Some of the pressure, particularly DOJ pressure on Jerome Powell, probably, I'll say likely, highly likely, very political pressure. So politics, unfortunately, have seeped into so much of this. It's unnecessary. It's not one side or the other. Remember, Jerome Powell played politics by calling inflation transitory when it clearly wasn't. You could have walked a third grader through this and they could have figured it out. He couldn't somehow. He's supposed to be the guy that knows this stuff. He played politics. He plays politics. You've got certainly the administration playing a ton of politics. And that's where the DOJ pressure is coming. So unfortunately, this Federal Reserve, the central bank, is supposed to be secluded from politics. Unfortunately, it is not. And so that's creating all these different pressures. And, I'd even say it's creating a lot of disagreement and friction within these Fed meetings. So to the Fed meeting, we had a press release that announced the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. Okay, so this ends 3 straight Fed decisions to cut. This cutting cycle of the Fed funds rate has now come to an end. Indications are right now, markets are in a belief that we're only going to see upwards of 2 cuts all year in 26 and 0 cuts in 2027. Now, the markets are of the belief, especially the betting markets, of the belief that those 2 cuts are not going to come anytime soon. Okay, so we're on a pause now. We had those 3 cuts in a row. We had what we expected yesterday, no change to the Fed funds rate. And the expectation is that in March, now a 92% chance on poly markets that there'll be no change. That's up from 85 before Powell's presser, before the statements. So there was nothing in there to lead the market to believe, oh, he's open to cuts. Because remember, Powell's going to be the Fed chairperson in March. He's going to be the Fed chairman in April, and there's a 77% chance in April that there'll be no change, okay? The first meeting that he could be out, because his appointment is up in May, would be the June 16th meeting. And that's the first meeting you have a better 50% chance of a 25 basis point cut. In yesterday's meeting, you did not have a unanimous decision. So there is still friction. There is still kind of politics at play. Usually you get a Fed group that's kind of on board. We've seen the most dissents, they call it, here are these recent meetings than you typically will see in history of these FOMC meetings. But you did have two dissents, okay? You had two Trump-appointed members of the FOMC vote for 25 basis point cuts. And then you had 10, one of them being Powell's votes on a no change. Okay. So, that was not the big news because, again, that was just as expected as the Fed funds rate staying at the 3.5 to 3 3/4 number. But that, I guess, would be the big takeaway of kind of what these discussions looked like. The Fed acknowledged that GDP, gross domestic product, ran at 4.4% in quarter three. Okay. Atlanta Fed is saying that quarter four is on pace to be at 5.4. I want to get that right. If it's 5.6, no, it's 5.4. So U.S. gross domestic product grew at 4.4% annual rate in the third quarter. The Atlanta Fed, these are in the show notes. So I dropped these into school so you guys can grab these. The Atlanta Fed estimates the economy is tracking at a 5.4% growth rate for the final quarter of the year. 5.4% on GDP, near 6. These are unheard of growth numbers. Inflation is down from its 40-year highs in 2022. 2022 is when Jerome Powell thought inflation was transitory after convincing Congress to print, both sides of Congress put that money in. Again, give crack to a crackhead, see what they're going to do with it. And that'll light that thing up. Current inflation running closer to 3% today, above Fed's 2% target. Well, if we have growth numbers at 5.4%, if this comes, now this is just a projection of what the fourth quarter is going to be. So we don't know for sure. But the 4.4% annual rate is pretty good. As long as you're growing over inflation, the target might be 2%. Now, over the last 3 months, what have we seen inflation? Core inflation's at 1.6%. It's under the target. They're looking for 2% on the PCE. You've got real-time inflation kind of trackers all over the internet suggesting inflation is even as low as 1.2% right now. In fact, there's a, I'll pull this up on X. Anthony Pompliano, big Bitcoin guy. He uses that inflation tracker. He says inflation's 1.2% right now. Now, again, I'm a proponent of like Barry Sternlight looking at it. If you put in real housing data, not this owner's equivalent rent crap, you're going to be basically right at or below the 2%. A lot of very smart people have been saying this for a long time. So he makes a tweet that says, Fed announced they're pausing rates. This is insane. Inflation is under the 2% right now. And he warns against deflation. Logan, friend of Bam, obviously corrects him. Hey, man, deflation is super rare. He had deflation of the Great Depression, deflation of World War I, but we haven't seen deflation. Now, we have seen a 10-year moving average of 3.17% on inflation. 1872 to present, BLS, Bureau of Labor Statistics, annualized inflation rate is 2.68, which we are basically at right now. We were at 2.7 on CPI on the last reading. We're at 2.7 since 1872 on the annualized inflation rate. Yet we are so hung up on getting to 2% because some dude in New Zealand plucked that number out of the sky many, many moons ago. And the Fed's like, we got to go with something as a target. Somebody in New Zealand said it. Not even in America. New Zealand. Nothing against New Zealanders, okay? But I don't think I'm digging into an economist from New Zealand. I mean, New Zealand doesn't strike me as a robust economy, okay? I mean, if it was an economist from China or America or, like a big real economy, I'd put some weight into it. But some academic from New Zealand, please. 2% is a phony target to begin with. Just like owner's equivalent rent is phony. I mean, why isn't the target 2.68? That's where it's been since 1872. And then you could argue that, hey, we're right there. Okay, so we've kind of solved for inflation at this point. Now, no. We haven't solved for inflation. What's the same story they've been pumping out here for quite some time? They meaning the Fed. Okay. They're talking about the tariffs. Okay. They're talking the same track they used last year. So they're maintaining inflation remains somewhat elevated. Okay. But economic activity is expanding at a solid pace. Solid? They use words that kind of blow your mind in these prepared statements. Economic activity is solid? 4.4 and 5.4%? When's the last time you saw those kind of numbers? That's just solid? Pretty robust. The committee noted job gains have remained low. We had the lowest on record last year of job gains. But remember, when you remove all the government hiring, job gains don't look like the year before when you're stimulating job growth. I like that we're getting back to real numbers. Okay? That savings is also one of the reasons the GDP is going up. You have real growth, not fake growth. You don't have a job market on steroids. Just eating your broccoli and your meat and potatoes. Just doing the things that have worked for years, okay? So they noted job gains have remained low and unemployment rate has shown signs of stabilization. We got an unemployment report here today for this week. We're going to look at that. But yeah, the job market beginning of the year has been not really a big red flag. The Fed maintained that inflation remains somewhat elevated, though. And what they're saying in these prepared statements is the same thing they've been saying for a year. Hey, we expect, here it is. Fed economists expect Trump-era tariffs to add short-term inflation pressure that may ease earlier in the year. Would they copy and paste that from last year? And we're going to get into some of the Q&A and some of it will involve some of the tariffs. They said this last year. Short term, they keep using the same line. And then you're looking around and you're like, where's this big inflation jump from tariff? I see a huge GDP growth. I'll take 6% GDP growth if we're dealing with a little bit of, closer to 2.7%, which is where we've been since 1872 on inflation. So, again, this is what we expected. They came out and they did nothing. And you have a lot of friction between this Fed chairperson and this administration. They don't like each other. This administration made a huge mistake putting the DOJ on, that's not going to pressure Jerome Powell to step down. If anything, it's going to keep Jerome Powell in the seat longer. You already have members of Congress saying as such. And so they don't like each other. They're at odds. There's not going to be, Jerome Powell has influence in the FOMC. There's not going to be the strong push to lower rates and help an administration that he just, it's not even what side of we know what side of politics Jerome Powell's on. It's not just that. It's that they just, quite frankly, don't like each other. Okay. Nick Timiraos, Wall Street Journal, says historical trivia on whether or not Powell will resign his Fed board seat at the end of his term as chair, meaning we know there's zero chance Jerome Powell will resign before his appointment in May. He has said that in plain English. I will not resign. I will fill out my term. Okay. But will he'll have the choice on historical precedent to move down. Okay. This would be like a former president all of a sudden being Speaker of the House. It's like, really? You don't want to just kind of ride off into the sunset? You want to kind of go down a couple rungs? Still a very prominent position in politics, get it? But you want to do that? So Alan Greenspan, going back, would almost certainly have stayed on the Fed's board, meaning Jerome Powell could leave the chairperson seat in May if Congress approves whoever the president appoints, and then take a seat on the committee, one of those 12 votes. And Alan Greenspan would have almost certainly have stayed at the Fed's board if Clinton hadn't reappointed him to another term. So Clinton, we obviously know that's not going to happen with Powell. He's not going to get reappointed to another term. But in this book that Nick Timiraos dug up, he's saying, hey, he would have done that. He would have moved down the table out of the chairman's seat. And he felt that there was enough respect for his views that he could still have some influence. There are enough on the FOMC that respect Powell's views where he would have influence if he does this. So this thought behind there might only be 2 cuts throughout the rest of the year, while I disagree with that play based on GDP growth, based on, job market is staying pretty strong, based on, inflation is in line with where we've been since 1872 on an annualized basis. And we're going off of some target from some bozo in New Zealand. So I'm in line with, we should have some cuts now, really make sure that we protect against jobs and all of that. But the market's belief that there might only be 2 or less the rest of the year. I think if Powell's on till May in the chairperson seat and he's on the committee moving forward, that those are highly likely. Now, the Fed funds rate is the overnight borrowing rate. It doesn't, always initially impact the 30-year fix. But like Logan says, hey, there's 60 to 70% of an impact over time on this Fed funds rate as it relates to the 30-year fixed mortgage rate, the 10-year and the 30-year spread. And so if there is 60 to 70% of an impact as how he kind of calculates that, and we're only going to get 2 or less cuts throughout the rest of the year, then look, Realtor.com's projection here of where we're going to end up on the 30-year fixed rate at the end of the year is 6.3. Like that could come in. I know we've been lower all year and we're getting excited about lower rates. I want to be an early mover on those lower rates. I've talked about that a lot. But they could come right in. I mean, the 10-year yesterday, we're at the high point of the last 5 days. There's no movement here. We're at near the high point of the last 30 days, near the high point of the last 90 days, 4.255. Okay, let's go to Jerome Powell's commentary here when he did the presser. This is really what the markets look for. What is he saying? What's his tone? Is he indicating anything that we're not seeing? He mentioned housing once in his prepared statement. I'll just give it to you. We don't have to go to it. He talks about available indicators suggesting economic activity has been expanding at solid pace. Man, economic activity has been pretty much more than a solid pace is what I'd say. Consumer spending has been resilient. People are still spending. Business fixed investment continued to expand. There's been more M&As in the last year than you saw the previous 4 years. I mean, M&A is open. Business investment is open. Look at all the tech leaders. They're all like, man, we can do business now. You heard it at Davos. Last week, you heard business leaders saying, we can do business now. We couldn't do business for the last 4 years. So all these things are moving now. But he copy and pasted a line he's used a bunch of times in the opening statement. In contrast, activity in housing sector has remained weak. Loves copy and pasting that into his prepared statements. Loves saying it, doesn't care about the housing sector at all. Jerome Powell's not a guy that believes in the American dream. His dream is his legacy. He's a selfish guy. Okay. So that was in his opening statements. When we go to the Q&A, nobody asked a specific housing question. There were 0 specific housing questions throughout the entire Q&A. Housing or mortgage did not come up during the presser, which is disappointing. Now, you have an administration that is talking about housing seemingly all the time. I get it. That's a political stance. It's a midterm election year. I get why they're doing it. It's branding and marketing. But for the press not to ask any questions about housing right now, now Powell does give a lot of the same answers, and maybe they're sick of hearing the same crap. So I get that. And there's other things that are going on that they wanted to get to. And they're really, kind of hung up on the drama side of things. But 0 questions, usually there are a couple. There were none. So let's go to some of these here. I will play a couple on jobs and on outlook, because these greater economic impacts will impact rates overall. First question, we'll skip over this one, Haley. I'm playing it. Talking about the job market and talking about how the household survey might be distorted. So, he likes to keep going back to that shutdown really having a big impact on data. Remember, he wants to take a wait and see approach on a lot of things. He got scared out of his mind at tariffs. Apparently, a year later, he's still scared out of his mind on tariffs. Didn't have the data from the shutdown. Wants to blame hesitancies on that. And so he kind of deflected a job question based on shutdown data, even though we're now a couple months out. So let's go to a growth question here. It's the Archie Hall question from The Economist, Haley. This question has to do with this, what the person from The Economist asked the question, calling it strong growth. The outlook in reference to the Atlanta Fed, not calling it solid, calling it what it is, strong. And we'll get Powell's response to it.
And then one more on growth and the kind of strong growth outlook, your strengthening growth outlook you're now seeing. How much of that is the fiscal stimulus we're seeing from the beautiful bill, the tax cuts, and all of that?
So you're seeing it already. You don't have much of the fiscal. I think the outlook, you're right. It's financial conditions and it's fiscal policy for 26. But you've got strong consumption that's been happening before financial conditions have been supportive, but before the fiscal effects really are shown. So essentially, the economy has once again surprised us with its strength, not for the first time.
All right, pause it right there.
Consumer spending.
So he kind of didn't want to give. He kind of was like, he was jumbling the heck out of his words in the beginning of that response. He's like, oh yeah, the fiscal. And then he remembered, wait, no, the beautiful bill actually doesn't kick in until tax season this year, which means quarter 3 and quarter 4 couldn't be impacted by he wants his natural knee-jerk reaction is like, what's the best political answer I can give here? But the growth is only expected to accelerate this year, economic growth, because of whether you like that beautiful bill or not, whether you think it's an ugly bill, I don't care. Okay. But just, and the debate of, is this going to add to to the national debt on the beautiful bill is a real debate. Now, the national debt is for the first time going the other direction because of the tariffs. Okay, so he doesn't want to give credit to the tariff thing of having economic growth, which is actually what Q3 and Q4 are really about. And the beautiful bill is only going to expand economic growth this year. So that is interesting. He finally got there and admitted, he's like, yeah, well, no, fiscal policy is going to be 26. So that hasn't happened. And then he says, economy has once again surprised with its strength. So they've been wrong on strength of economy in their projections. They've in their feelings. They've been wrong. They've been wrong all year on this. They continue to get surprised. There are Secretary Scott Bessent will tell you, he's like, wait till you see the beautiful bill kick in. The average American is going to save $1,000 in their pocket or get $1,000 more in tax returns than they've seen in the past. Average American across, they will spend that money. We saw what happened with a couple $100 during COVID time. The money goes right pumping into the economy. People should save it. They won't. They'll spend it. And so he's talking about wait till you see what happens there. And so Scott Bessent doesn't sound surprised of what's coming. Powell continuously, for whatever reason, sounds surprised. Let's go to the rest of that response there.
Although it's uneven across income categories, but consumer
talking
spending,
about consumer
overall
spending
numbers are good, and we're benefiting from the AI build out of data centers. That's another thing we're benefiting from. But the economy overall, growth is on a solid footing. It looks like, and it's not just those things. It's just the consumer is filling out surveys that sound really negative and then spending. So there's been a disconnect for some time between downbeat surveys and reasonably good spending data.
I started talking about this a little bit. You ask somebody, it's like, hey, will you ever be able to buy? Nope, I'll never be able to buy a house because so-and-so on Instagram told me I'll never be able to buy. My kids will never be able to buy. And, I like living in a death spiral. I like believing negativity. I scroll Instagram and I see the top 0.1% of how life looks. And I think that's how my life should look. So it's easy to go from an hour and a half of TikTok scrolling and Instagram scrolling into an online survey and say, yeah, everything sucks. My confidence is down. And then to his point, you look at spending and it's like, nobody is spending as if everything is coming to an end. So there's two parts of that. Sometimes people spend because they really don't believe in their future, which is like the worst thing you can do. Nobody's educated on them. Like, hey, man, it might take a little bit longer. Okay. There's a reason you don't get your driver's license at 8 years old. Like, you wait till you're 17 or whatever the age is. And then, so there's that. Like, I never think I'm going to get there, so I'm just going to spend, YOLO. And then there's like the fact that, no, there is just a lot of growth in the economy. It's a consumer economy. People are spending and there's still a lot of money out there. So I've been talking about this a lot lately, you got to be careful with some of the surveys. You got to be careful with some of the feelings. You got to be careful with some of the messaging that's being put out there. People are getting conditioned right now to believe that everything is bad. Capitalism is bad. Markets are bad. Free markets are bad. Businesses are bad. Owning more than one home is bad. I'll never be able to buy a house. And it's just getting piled on. And it's a lot of nonsense. And everybody who's piling it on the internet offers no solution, doesn't dig into data, and is looking for clicks. They're looking for their own dopamine hit. Oh, I got another big pop on IG. Well, congratulations. You played to the algorithm. You played to the doomers. A lot of people that they got nothing to do all day that want to give you a heart on that. So I'm going to start looking at this more. I'm going to start calling it out more because to me, It's just a lot of nonsense in 26. Kristen Romans from NBC News talks about this uneven consumer spending, digs into that.
Thanks, Chair Powell. Christine Romans from NBC News. You talked about how consumer spending is uneven. The president calls inflation defeated and solved. The FOMC says it's a somewhat elevated inflation. But you talked about those customer survey or those consumer sentiment surveys and public opinion polls that show that most families say the cost of living is still issue number one. What is the conversation around the table with your colleagues about how wealthier consumers seem to be driving so much of the economy and why so many families still feel like they just can't make ends meet after 5 years of rising prices? What is that discussion like?
So a couple of things. One, there's something to it in that we know that higher income households that tend to own real estate and tend to own stocks, securities, and those assets have been going up in value and increases in wealth do support spending over time. So, and that's clearly a part of the story. We also know that for some time now, for a year or more, we've been hearing from retailers, for example, that serve lower income customers, whether it be food or the big box stores or anything. They're saying the same thing, which is our consumers are looking to economize. They're trading down from brands and they're buying less, and it's changing their buying habits and that kind of thing. So we're seeing that, and that is a reality of what we're seeing. They're still consuming, but they're feeling it in a different way. I would say more broadly on affordability, we have a vast network through the reserve banks and also through the Board of Governors where we talk to small and large businesses and households, and so we do hear a lot about affordability, and we take that very seriously, and we take it to heart because one of our jobs is price stability. And so, the best thing we can do for people who are feeling that squeeze is to keep inflation under control and, frankly, to finish the job of getting inflation back down to 2%.
Yeah, so they're so hung up on 2%, but what Jerome Powell should have been hung up on is not convincing Congress to overspend to print all that money. We've broken through a new price level, and you had a huge, percent of the blame pie. Jerome Powell's he pushed Congress on that last $2.3 trillion that nobody needed. Talk about, you can debate whether inflation is defeated. Everybody knew COVID was defeated when they printed that last 2.3 trillion in 2022. I mean, if you were still running from the virus in 22, I'm just sorry, you just weren't paying attention. And Jerome Powell had a big part in that. And so unfortunately now there are people who are struggling with the new price level. And you want to call that affordability, but it's never going back to 2019 prices. It's just not. And so it's going to be a period of time where wages have to catch up. Wages have the best chance of catching up if you have these kind of GDP numbers that you saw in quarter 3 and quarter 4. If you let the economy rip through growth, get rates down, and that's going to help wages go up. Both those things help businesses get wages up. You printed all this money. So yeah, the dollar's not going to be worth as much as it was. You already did it. It's in the rearview mirror. We can't go back to 2019. And now you've got to let this kind of thing work itself out. He's obsessed with getting to 2%. I do think, one place I don't know if you can always say inflation is defeated. We don't have to look at it anymore. You always got to look at it. But that we're at the same number essentially that we've been at since on an annualized average since 1872. I'm not as hung up on getting to 2% when you have these growth numbers. If you had some of the growth numbers that we saw, and they were bad growth numbers because we were stimulating it through government growth that we saw, buy then I'd be like, yeah, we're not growing enough. We got to grow more. Okay. An AI build out question I thought was really interesting to get his answer from. We'll go to that one. from
being positive
Romans.
for economic growth this year. I wonder, as you look at the weakest year last year for job creation of a non-recession year since like 2003, are you concerned about AI maybe supplanting more entry-level work and entry-level jobs? And how does that play into what you're watching about the labor market?
So everyone, of course, is watching AI and the deployment and, trying to understand exactly what's happening. And there's a wide range of possibilities. It's hard to say. And of course, anyone who uses it is amazed at what it can accomplish, right? So every technological wave will eliminate some jobs and create other jobs. And it's always been the case. If you look back, wave after wave after wave, there will be some disruption, but ultimately technology increases productivity, which is the basis for rising wages.
There you go. I want to stop it there.
Immediately.
Wages, your wage would rise right now if you were proficient in AI. Right now, immediately today. So you got a young generation looking for a job. And if they just knew AI, if they weren't trying to get a job that aligned with the college degree that mommy and daddy convinced them was so important in life, and they took out all this debt, parents and teachers are leading high school graduates down a really bad path. And so you get out and you wonder, what happens when they're 22, 23, 24, 25? They start thinking about what's next. Is next going to be buying a house? Nope. I've got $300,000 in college debt. Can't buy a house. And then they start feeling the way everybody feels. Well, it was because somebody told them college was really important. If it was really important, you should have paid for it, mom. If it was really important, you should have flipped the bill, dad. You shouldn't have had them go and take out debt so that you can put a bumper sticker on your car. My kid's going to the University of Illinois. My kid went to Alabama. Roll Tide. Nobody cares. You set your kid up for a disaster, and it's no wonder that kid isn't going to be able to buy a house. But if your kid focused on needs, trades, AI, they'd be rising their wage so fast right now that they might be thinking in 10 years, how many investment properties do I own? Powell said every technological wave is going to create jobs. It's always been the case. When you create jobs, you don't need other jobs, of course. And this is going to rise wages. So the AI is a huge opportunity. I think it's part of this GDP growth. And I'm glad that Jerome Powell acknowledged that. There's one last question I wanted to get to on tariffs, if we can go to that one, Haley.
And just a quick follow-up. We've been talking a lot about tariffs and passing through, and we've been talking a lot about them for the past few months.
For the past year.
The trade landscape is still in a constant state of flux. Announcements, threats, negotiations, they're all frequently changing. So I'm wondering how you actually track these, what data or channels are most critical to follow this in real time.
Trade?
Yeah, the impact of tariffs and how they're changing.
Yeah, I think our staff has done a really nice job on that, and they've kind of put it together in real time. So as I mentioned, a tariff gets put in place, you can pretty much track its effects on pricing and on everything. And so you build a model up from all of the tariffs. At the beginning, it was very much of a forecast. Now it's every cycle that
That's
goes
the part
by,
I wanted to get to. There you go. You can drop this off, Haley. At the beginning, it was very much a forecast. And remember, they've been wrong on the forecast time and time again. And this is one of the reasons why you didn't see cuts sooner, is because they were saying, hey, we don't know what's going to happen with tariffs. Now, they're still kind of riding the same talk track of last year. It's like, hey, there's going to be some short-term impacts. And there have been obviously some short-term impacts on tariffs. But when you weigh that with how much GDP growth there is, you have to start to make a mathematical decision. Was it all worth it? And I think there's obviously a debate there, but there's a lot of reasoning to suggest that, yeah, maybe, that thing is kind of working there as designed. And it has been completely blown out of proportion because we were told that the entire economy in the world was going to collapse because of these tariffs. And certainly we've seen quite the opposite there. All right, jobs are going to be the big thing. Obviously, that can force the hand. Now, we don't want to see their hand forced because of jobs, because that means the job market would be getting softer. I hope nobody's rooting for a soft job market. That's bad for people everywhere. Now, there was some thought in Q4 of last year that jobs were getting weaker. And what we've seen so far here in 2026 is consistency around jobs, stabilization, as Jerome Powell just put it. And in this past week, this data comes out today. So after yesterday's presser, unemployment for the week comes in at 209,000. It's a decrease from 1,000 from the previous week's revised level. Okay. So the previous week was revised from 200,000 to 210. So we're kind of riding in that 210. Anything under 250 is really kind of good. 4-week moving average is on the low side of where we've even seen throughout the past year. 206,250, and weekly unemployment not showing any signs of creating cracks in the employment. So stabilization on employment, another good weekly read there as we close out Fed week, and we'll continue to look. There's been no new Fed chairman appointed. There's some belief that could have come as early as yet. We keep hearing it could come, and it just hasn't come. I think that DOJ investigation, they got to find a way to drop that. That seems highly political, seems unnecessary. Whether it's, whether there's a legitimate argument for it or not, it's just, it's not going to help in the end kind of get where you want to go as an administration. So I think it's a foolish play. So we're still waiting on that. We're waiting on both the DOJ investigation of Jerome Powell, and we're waiting on the new Fed chair decision. And then third part, Powell's decision, whether he's going to stay on. But markets expect no cuts here over the next 2 meetings before Powell's term is ultimately up. Keep our eye on jobs and all things inflation related. 10-year suggests that the 30-year fix should remain kind of where we've seen it all week, as we don't have much of a change there. Yesterday on Fed Day, Mortgage News Daily put out a read of 6.16 on the daily survey, just up a hair from 6.15 the day prior. So all week we've been in this low 6 range, under 6.25, not quite as low as 6, certainly not a 5 handle, which many would like to see, but under the Realtor.com projection for the year. So that is the good news. All right. That's your hot sheet here for today. I'm jumping on a plane. I'm going to Austin, Texas. If you're in driving distance, I'd love to see you at Realty Hack. Be my first keynote of 2026 tomorrow afternoon. I'll be in Austin for 24 hours. We will be doing a hot sheet from Austin. I know Bobby's heading to the airport himself. So we'll have a hot sheet here for you guys tomorrow morning to close out the week. It's a pleasure to do it. It's a pleasure to be with you guys. And make sure next week you sign up for BAM Pro Bowl. This is a free event. It's BAM Pro Bowl 3. If you've been to BAM Pro Bowl 1 or 2, you know you got to be there. It's a free virtual event. It's bamprobowl.com, but there is a limit on seats. I'm doing a fireside with James Dwiggins and Jared James. And these are two of the most, I think, opinionated but sharp minds in our industry. And I'm looking to press them on some of the things that are happening all around us. There's so much going on. Neil Dingra also is going to be obviously at BAM Pro Bowl. BAMProBowl.com next week, Wednesday. Make sure you're signed up, and I'll see you guys there. Until tomorrow, of course, have a great day. Good luck and toodaloo.